And we're joined now by Raffaella Tenconi, founder and managing director at ADA Economics, chief economist at Wood & Company. Good evening.
Good evening.
So, how is the EU doing financially these days? Because I guess that the COVID pandemic and then Russia's war with Ukraine must have taken its toll on EU finances.
Well, first of all, the cyclical position of the economy right now is quite weak, but it's expected to reaccelerate next year. In terms of debt load, debt burdens have increased, and in particular, the biggest challenge right now is higher interest rates, which are weighing on the interest rate burden of all the member states. But in the broader scheme of things, I would say the economy has all it needs to face the transition. The biggest challenge that I see on my end is that we have set the direction, but the actual implementation of such a complicated green energy and digital transition requires fine-tuning of the legislation as time goes by, because there are enormous investment needs that need to happen in the next 5 years in order to keep up with the climate change timeline, so to speak. So I would say, look, it's a decent starting point, but the complexity is more in the implementation.
I see.
Mrs. Tenconi, let me ask you about Ukraine and the funding that the EU has been providing Ukraine with. Some people who are skeptical are saying it's a burden. Do you agree with this statement?
I don't agree with this statement in the sense that I think Ukraine and the security of Ukraine is integral for the security of the whole of the Union. And if you look at the next 20, 30 years, appropriate integration of the Ukrainian economy into the European economy in full will provide benefits in the long term. So I think, of course, it is a complicated and difficult financial requirement right now, but I think it's one that is worth doing. But let me be clear that the European elections will define whether we are able of meeting all of the promises, because although the legislative part has been set, in reality there is enormous political ongoing negotiations that still has to happen.
Precisely. The far right is rising to power in many parts of Europe because people do not agree with EU's policies about the Green Deal, obviously, which you already mentioned, and helping Ukraine. So I guess that the newly elected European Parliament MEPs will need to somehow navigate not to lose the support of the voters. So how are the sanctions that are imposed now on Russia affecting European economy? And do you think that maybe in the close future there will be no more sanctions, but the EU will maybe need to act on the contrary?
I mean, to be honest, I think the sanctions were the most important symbol for Europe to show that they were united, and it helped accelerate the energy transition that the European Union had started anyway. Were they effective in weakening the Russian economy as people had expected originally? When you look at their GDP numbers, not really, but the GDP numbers would not really tell you the human cost that the Russian economy is going through. If we go back to look at the European perspective, look, I think there are three key items to think about in connection with these elections. The first one is perhaps the least obvious, but the most important, especially in financial terms. Okay, so the rule of law mechanism that the European Union has introduced, which increasingly monitors member states before they join the EU and when they are in the EU on their respect of the democratic rules, is increasingly tied to countries' ability to access the EU funds, and therefore also benefits from lower borrowing costs. The new European Parliament will need to continue to enhance this tool. As you said, there is a growing Euroscepticism part of the parliament, but not enough to really block this process. This process is critically important because if it stalls or if it reverses, over time it essentially is going to fracture the European Union, and it's not going to have the unity, the effectiveness, and the rapidity with which to respond to all of these external shocks. So to me, this is absolutely the most important thing to look in the next few months. Then the second line, of course, is more on the energy transition implementation. I think there are legitimate reasons why, for example, taking out combustion engines completely by 2035 is not really a realistic target. It created enormous affordability, sustainability of grids of electric cars. So there are a lot of implementation challenges that, in my view, will be softened, although you don't change the overall target. Okay, so this is an important second issue. And the third issue, as you said, is also Ukraine and defense spending. Defense spending there needs to be a budget. It needs to be coordinated. And it's not just the European Parliament that matters, it's also the European Council. So if countries increasingly polarize on these issues, the EU is not going to be able to really move on this last chapter fast enough. And again, you go back to disintegration of the European Union in the long run, it's going to have very significant financial repercussions for all of the member states.
But do you really see EU working as one on defense spending?
I think at least 25 member states are pretty much on board. One is particularly skeptical, and one, I think it's still yet to be seen exactly what is the position. So the risk is that 25 member states are going to go forward, and the ones that significantly resist this chapter will probably begin to see markets pricing the potential exit from the European Union. So 25 member states will remain largely cohesive and effective, and some of them will face significant financial risks.
Mm-hmm. But what about certain deals and things that are put on hold ahead of the parliamentary elections? Are there going to be, that come back and sort of be put on the table, such as, for instance, the Mercosur agreement? I mean, it was being negotiated for so many years, right? And sort of then tabled for later. So perhaps it will come back, right?
I mean, it will come back. You know, the European Union is a very long machine, and especially trade negotiations can take literally decades. It appears to me that the priority of the next Commission and next Parliament is actually going to be in a slightly different area. It's going to be in the Capital Markets Union. That's the new, so to speak, era where there is a strong push by most member states to advance, because it's a necessary ingredient to deepen financial markets in the EU, which are necessary to finance all of the things that we want to do, you know, defense, energy transition, digital, and so on and so forth. I think on trade, the next few years are not going to see that much, because there are also a growing barriers coming through because of the green transition, right? I mean, there will be a carbon capture effect, there will be a carbon tax. So I think anything on trade deals will technically move forward, but you may not see that much advancement in the near term.
Right. Now, can the EU, as it is now, in such a financial state, can it afford to enlarge, to invite more countries to join it?
Well, enlargement for the European Union and for the private sector of the European Union has overall been profitable. Actually, I would say successful on many levels. And the countries that have entered the EU, most of them see a convergence in wage dynamics that is very significant. They benefit from better legal frameworks. So, I mean, the benefits are not evenly spread. They don't necessarily are always every year increasing amounts, but I think both sides benefit. The difficulties is in the enlargement right now, when you look at Georgia, Ukraine, Moldova, Macedonia, all of these countries need to address especially corruption areas and legal system upgrades, which are very difficult, and they will not be able to become member states until they do that. So the process is going to be very long. In terms of financial support, countries that are not in the EU do not receive that much relative to the EU budget. The bulk of the funding comes once you are a member state, and then you are eligible for significant EU cohesion funds.
Raffaella Tenconi, thank you for being with us this evening. Much appreciated.
Thank you.
Thank you.